If you agree, we may start now. Ladies and gentlemen, representatives of the media, members of the Council of the National Bank of Serbia, colleague economists, it is a pleasure to welcome you to the presentation of the latest inflation report. Before I give the floor to Mr. Hinic, in order for him to inform you in detail about the contents of the report, I will take a short look at the current economic developments and our expectations for the coming period. Year-on-year inflation continued to move below the lower bound of the target tolerance band, and it came at 1.4% in October. For more than 2 years, inflation has been low, and since March last year, it has ranged below the lower bound of the target tolerance band. Inflation movements below the lower bound of the target tolerance band resulted from a fall in prices of petroleum products and unprocessed food, but also from a slower growth in administered prices compared to our initial expectations. The current inflation projection is somewhat lower than the inflation projection from the August report. According to our central projection, inflation will move around the lower bound of the target tolerance band in the coming period in order to trend gradually towards the 4% target in the second half of the next year. It will continue to be below the lower bound of the target tolerance band, but is expected to return within the tolerance band in January as a result of a low base effect with regard to price of petroleum products and cigarette prices, because there was a strong fall in these two groups of products in late last and early this year. Inflation is expected to stabilize within the target tolerance band in the second half of the next year. And while inflation projections have been revised downwards, GDP growth projections have been revised upwards from August. GDP is expected to grow by around 0.8% this year and 1.8% next year. Economic activity growth has been revised upwards by 0.3 percentage points for this and the next year, mostly on account of higher than expected investment growth. If we look at GDP movements at the level of the entire year, positive contribution to GDP growth for this year will come from investments, while negative contribution is expected to come from household consumption and government consumption, mostly as a result of implementation of fiscal consolidation measures. Next year, we expect a moderate recovery of household consumption, but the greatest contribution to growth in the next year will come from investments. Economic recovery was faster than we initially expected, with a substantial narrowing of fiscal and external imbalances. Current account deficit this year, according to our estimates, will be 1.5 percentage points lower than the deficit from the prior year, and it will come to around 4.5% of gross domestic product. By contrast to earlier years, this year, current account deficit will be fully covered by the inflow of net foreign investments. Our projections for GDP for next year are that it will be approximately the same as this year, and that it will be fully covered by the inflow on net foreign investment. A significant narrowing of the fiscal deficit and external imbalances contributed to a substantial improvement of conditions in which monetary policy easing took place this year. Monetary policy of the National Bank of Serbia in the next period ought to remain expansionary, but the degree of monetary expansion will depend on risks coming from the international environment and an evaluation of their inflationary effect. I would like to thank you now for your attention, and I give the floor to Mr. Hinic.
Thank you. Ladies and gentlemen, esteemed members of the press and fellow economists, welcome to the presentation of the November inflation report, where we will present our analyses of the current and expected economic developments and explain the decisions the National Bank of Serbia has taken based on these analyses. Observed year-on-year, inflation continued to move below the lower bound of the target tolerance band, and GDP continued rising. In line with new information and analyses, our inflation projection is revised slightly downward and the economic growth forecast upward compared to the projections from the August report. A downward revision to the inflation projection reflects a slower than expected rise in prices of primary commodities. Inflation is expected to hover around the lower bound of the target tolerance band until mid-2016 and trend steadily closer to the 4% target thereafter. Expectations of GDP growth rate for the current and the following year have been revised upward as investment increased more than initially estimated. Consequently, GDP is projected to grow by 0.8% in 2015 and by 1.8% in 2016. The National Bank of Serbia continued with monetary easing, which reflected on the cost of government and private sector borrowing. Subdued inflationary pressures, progress in fiscal consolidation, and reduced external imbalances created room for monetary easing this year. In 2015, the fiscal deficit is expected to drop by around 40% and the current account deficit by 1/4 relative to the year before. Furthermore, the latter will almost certainly be covered by foreign direct investment inflow. Coupled with fiscal adjustment, this represents a significant economic policy result as it strengthens Serbia's resilience to external shocks. Gradual reduction of internal and external imbalances is expected to continue in the years ahead. In the previous months, China found itself in the focus of world economic developments. Signals of China's economic slowdown and changes in its exchange rate policy heightened uncertainty in the international financial market in August, exerting downward pressure on financial assets prices in stock exchanges worldwide. The financial market stabilized relatively quickly, though, as the Chinese central bank eased its monetary policy stance and the Fed postponed its rate hike. However, the expected rebalancing of the Chinese economy and slowing of its growth dented global growth prospects and affected the Fed's and ECB's monetary policy decisions as key determinants of global liquidity. So far, the Fed has not made the decision to raise its key policy rate, while the European Central Bank announced the possibility of additional stimulus in December once fresh macroeconomic projections are available. Future movements in oil prices remain a significant source of uncertainty in the international environment. Prices were pulled down by a global economic slowdown and dented demand, but also by increased oil supply, and will likely remain subdued in the period ahead. Deceleration of Chinese economy has affected markets of other primary commodities as well, primarily metals, where prices are considerably depressed. Persistent uncertainties in these markets in the coming period will be a significant factor in forming monetary policy decisions of the National Bank of Serbia and other central banks, as well as one of the determinants of inflation's return within the target band. Global factors were a significant driver of volatility of risk premia of emerging economies, including Serbia, especially in the second half of August. As the situation settled, October saw a decline in risk premia, which was more pronounced for Serbia than for many other emerging economies, owing to a considerable reduction in internal and external imbalances, improvement of macroeconomic prospects, and successful implementation of the arrangement with the International Monetary Fund. Serbia's risk premium, measured by EMBI, currently equals 251 basis points, which is 46 points down from the end of the second quarter. Domestic factors, hand in hand with a higher inflow of foreign direct investment, fueled appreciation pressures on the dinar. A relatively high inflow of remittances and continued rise in banks' FX-indexed assets also worked towards boosting foreign exchange supply in the past months. In order to moderate excessive strengthening of the dinar, the National Bank of Serbia intervened in the interbank foreign exchange market to buy a total of 520 million euros in the period between July and October. It intervened on the sales side on 2 occasions, in August and October, each time selling 10 million euros. Due to the recovery of production in mining and energy sectors and continued positive trends in construction, the third quarter posted further year-on-year growth in GDP, which, according to the flash estimates of the Serbian Statistical Office, equaled 2%. Following strong growth in the previous 3 quarters, industrial production subsided in the third quarter as anticipated, which was a major factor behind a mild seasonally adjusted fall in GDP of 0.4%. On the expenditure side, the strongest positive contribution in the third quarter came from private investment, sustained by a better financial position of corporates, reflecting a drop in oil prices and lower costs of borrowing. Investment growth was also driven by the reforms of the business and investment environment taken over the last 2 years, as reflected in Serbia's improved international competitiveness ranking in the World Bank list. GDP is expected to grow by 0.8% in 2015 and to step up to 1.8% in 2016. GDP growth rates have been revised up by 0.3 percentage points relative to the August projection due to the faster-than-expected growth in investment. It is favorable that, in contrast to the period of 2011 and 2012, when investment growth was concentrated in oil and automotive industries, investments are now more dispersed. Like in August, we expect that consistent fiscal adjustment and implementation of structural reforms will lead to higher investment. At the same time, negative contribution in 2015 will originate from household and government consumption that will be weighed down by the effects of fiscal consolidation. However, the real fall in household consumption was softer than anticipated, owing primarily to low and stable inflation, reduced costs of borrowing, rising remittances, and private sector wages. Economic activity growth in 2016 should be led by investment, mostly in tradable sectors, and after 4 years, positive contribution is also expected from household consumption. On balance, the risks to GDP projection are judged to be symmetric. Upside risks are mainly associated with stronger than anticipated positive effects of structural reforms and low oil prices, while the key downside risk is the speed of recovery of the euro area due to a possible slowdown in global growth. Inflationary pressures remain subdued as a result of the majority of domestic factors, as well as of low inflation abroad and low prices of primary commodities in the international market. Year-on-year inflation continued to move below the lower bound of the target tolerance band and came at 1.4% in October. Inflation's undershooting of the target since the start of the year mostly reflects the fall in prices of petroleum products and unprocessed food and low increase in administered prices. Inflation expectations fell further down due to an extended period of low inflation and anticipated weak inflationary pressures in the period ahead. The financial sector and businesses expect inflation in October 2016 and 2017 to undershoot the target midpoint of 4%. Under our central projection, year-on-year inflation will be moving around the lower bound of the target tolerance band until mid-2016 and is expected to trend steadily closer to the 4% target in the second half of 2016. In the short term, inflation will move below the lower bound of the target tolerance band and may return within the band temporarily in January due to low last year's base for petroleum product and cigarette prices, which decreased notably late last and early this year. On the other hand, aggregate demand and low inflation in the international environment will continue to act as disinflationary factors, though less so than in the prior period because of the expected recovery of economic activity in Serbia, gradual increase in primary commodity prices in the international market, and euro area inflation. The anticipated gradual increase in primary commodity prices from their currently low levels may lead to a moderate increase in food prices, which have been broadly stable in the last 2 years due to low production input costs. Food inflation is, however, not expected to exceed the inflation target in the period ahead. Administered prices are assumed to grow by 5% in 2016, which is much lower than the average recorded in the prior years. The new inflation projection is slightly lower than the previous one, and the risks to the projection are mildly tilted to the downside. Risks are mostly associated with movements in global oil and primary agricultural commodity prices, but also with movements in administered prices. It is precisely due to these factors that in the past year inflation moved below the central projection rate from the November 2014 inflation report, though it remained within the range projected at the time. After being cut to 5.5% in August, the key policy rate was trimmed further in each of the next 2 months by 50 basis points to 4.5%. In all, it was cut by a total of 7.25 percentage points since May 2013. Additionally, in September, the Executive Board decided to lower the FX reserve requirement ratio by 1 percentage point in each of the next 6 months. Together with key policy rate cuts, this is expected to lead to a further lowering of bank rates and contribute to the recovery in lending. As inflationary pressures are likely to stay low in the period ahead, the monetary policy stance of the National Bank of Serbia should remain expansionary. Given the current prevalence of external risks associated with movements in the international financial and commodity markets, the degree of monetary expansion will depend primarily on the assessment of their potential inflationary effect. The National Bank of Serbia will, however, continue to be cautious and conduct its monetary policy so as to ensure a sustainable return of inflation to target level in the medium term. Thank you for your attention.
Let us start with questions. Milica Rilak, Radio Belgrade. I have 2 questions. As you say that you expect a positive contribution from a recovery in household consumption to GDP growth next year, do you have a projection? This is a question to Mr. Pijacic and Mr. Hinic. Do you have a projection of the contribution from this increase in wages and pensions to GDP growth? Also, other projections, how much would the rise in excises and petroleum products contribute to inflation? The first question is the question regarding the contribution and the increase in household consumption in the period ahead. According to our estimates, the contribution to total GDP growth from an increase in house consumption in the year ahead ought to be 0.1 percentage points. The second question is the impact of the increase in excises. The increase in excises by 2 dinars should have a direct impact on inflation of 0.07 percentage points. We do not expect a significant effect, a spillover effect to other prices, given the fall in prices of petroleum products. Can you clarify how much this is significant for your and our expectations regarding GDP growth? If we look at our growth projection for the next year of 0.8%, the contribution of 0.1 percentage points is not dominant, but it is a good indicator of future movements with regard to household consumption.
A question for Mr. Pijacic. Since inflation is going to undershoot the lower bound of the target tolerance band, is there a threat of deflation for Serbia? No, we do not have any concerns when it comes to deflation in Serbia. Deflation fears in Serbia are not justified for 2 reasons. The first one is that the National Bank of Serbia has significant room for using conventional monetary policy measures. And here I'm referring primarily to the additional room for further monetary policy key rate cuts and the lowering of reserve requirement ratios. And the second reason is that Serbia is one of the few countries that hasn't faced deflation in the prior period. Not at a single point in time were we faced with the threat of deflation. At the same time, a significant number of European countries has been faced with low inflation rates or even deflation. So if we take a look at 45 out of 45 European countries, 35 countries in September 2015 had a year-on-year inflation rate of less than 1%. Let me remind you that in September this year, inflation measured 1.4%, and of the 35 countries that I mentioned that had inflation below 1%, 21 countries had negative inflation rates, that is deflation. So in this sense, there are no fears that deflation will occur in Serbia.
What do you on what do you base the forecast of growth in private consumption? On all available results, on movements in wages in private and public sector, inflow of foreign direct investment, inflow of remittances, as disposable income, then lending activity. These are all indicators that we use. We also use indicators regarding retail trade, both retail and wholesale trade. So all these indicators that point to movements in consumption. Wages, they have equal treatment, all three. We are talking about our estimates of private consumption, so final private consumption of households. Which indicators we take into account? These are total wages, lending activity, remittances as a source for consumption. We also take into account movements in retail and wholesale trade. Do you think that all these indicators will increase at an equal pace? So when you do estimates, you assign weights to each of these indicators with regard to their share in consumption. So not all of them will increase at the same pace. Of course, they will not. What will happen next year? Sources of consumption next year will definitely be higher, all of them. So we expect a higher inflow of remittances, as they mostly come from European countries whose performances this and next year are very good. We also take into account a significant recovery in lending activity next year, which is also another indicator that points to an increase in consumption. Also, increase in wages, both in the public and the private sector, that is expected next year. So these are the key indicators.
I would like to add something. Why do you avoid the topic which is very interesting now in the context of financial crisis? So when talking about GDP growth, everything is true that you have said, and all of this depends on developments in the environment, international environment. But when we had the last IMF mission here, they took into account the balance of risks, and they said that there could be some effects from migrant crisis. We highlighted a significant fall in the manufacturing industry, and which was, according to our estimates, due to the closure of frontiers with Croatia in September. And we even gave some minimum quantitative assessments of those effects. But we also estimated that this was an incidental and one-off effect which should not reoccur. Now we are faced with everything that happened in Paris, and it seems that the whole process now is escalating, and this could leave some consequences for economic activity in the European Union, or at least in members of the European Union that our exports also depend on. I would also like to say that, based on the latest data for the last 2 months, in Germany, we are seeing a negative growth rate. So maybe this is incidental, but we have to take into account another thing, that this political turmoil, which started recently, is something that Ms. Merkel noted, and she's now faced with a huge pressure from the opposition parties, and it is a question now what their stance, what their position towards migrants will be like. And then we come back again to the threat of Serbia becoming a camp for all the migrants. So I'm not asking any questions, I'm just drawing your attention to this fact. When I have no objection when it comes to the assessments you have stated, but we should take all this with a pinch of salt and be mindful of the risks in the international environment.
First of all, I would like to draw attention to the fact that we have stated our reservations with regard to the possibility that economic growth in the European Union will be lower than expected, and this has been explicitly stated. We did not go into details as to reasons behind these unfavorable performances in the European Union, but one of the factors could be, let's say, the migrant crisis. Of course, this is undisputable. With regard to movements in specific sectors regarding food industry, which had a relatively sharp fall in the last month. In September data, we do agree that most probably this was an incidental event. We are not entirely sure as to whether we can ascribe this entire event to the closure of borders. And I'm sure that you are also unable to claim this with certainty, because there are indications there was a large number of investments in a segment of food industry, but that incidental event relating to a fall in manufacturing is also indicated by a fall in stocks of inventories of finished goods. So there may have been a limitation with regard to raw materials, to inputs, relating to the possibility of their supply. But this would be a strange thing because in view of the short period of the closure of the borders. So it is unlikely that it could have reflected so strongly on the food industry. It was been that the food industry did not have any inventories of raw materials and intermediate goods, because this story ended in 10 days. I would not entirely agree with your view. And why did I say this? When the Friday night in Paris occurred, on Saturday morning, a guest in the morning show on RTS was Mr. Volin. And the anchor asked him if he thought that the events in Paris could trigger a certain increased restriction with regard to European policy to migrants. And he said, no, children cannot be terrorists, which means that he's either trying to deceive someone or he does not understand anything himself. But this entire crisis regarding to terrorism and the Islamic State and everything that is happening seems to be a consequence of a political unpreparedness of leadership, not only in our country but in European countries as well, who were very much concerned about human rights.
When talking about migrant crisis, I'm wondering whether you have any data to what is the inflow of foreign exchange arising from the huge number of migrants that were here in Serbia. So we could hear in public different comments about the reasons for the strengthening of the dinar. One of the reasons cited in the media was the migrant crisis. But we do not share this view. We do not have precise data on the amount of foreign exchange spent by migrants in Serbia because they're only transiting here. Their consumption is current consumption and necessary consumption. This is only a relatively modest amount. So if there are no further questions, I would like to thank you for your attention.